University of Missouri Extension Ag economist Ron Plain is our marketing analyst this week. We talked with Ron Tuesday afternoon about the demand for pork, the effect of corn prices on break-even margins, and the seasonality of prices in the hog market.
Well, Jeff, there's a pretty consistent pattern in both production and prices. This time of year, we should be getting close to the start of a seasonal rally. Hog prices normally peak sometime around June and decline as you move after that. So a few more weeks with some fairly stable prices, then look for a seasonal upward trend and push hog prices up another $10, maybe $15 a hundredweight by the middle of June.
Where are margins now, and where could that push them to? And you know, assuming that corn price doesn't run away or completely flop.
Yeah, well, margins aren't very good now. We've lost money for about 6 months in a row in the hog business. It's due in part to low hog prices and also due to very high feed costs, corn at $7 and at times higher. We're probably not going to see much improvement in corn price, at least much decline in feed costs until we get close to harvest this summer, so you can kind of live with that. Hog prices, though, should rally. We've had those summer contracts at times close to $100 on a carcass weight basis, and if we can get that again, we'll have some good profits this summer, we think.
Contrast for me the losses that are being seen in the pork industry versus what's being seen in the beef industry.
Yes, last year the average hog producer lost about $12 per hog, so it was a tough year. In the cattle business, cow-calf producers by and large had a fairly good year. Feeder cattle prices were record high last year. Margins got real tough in the feedlots, though, because we ended up with some very high-priced corn. And so for those cattlemen who were buying corn, 2012 was a tough year. If you could get by with grass, if you had enough rainfall, it was, for most cattlemen, a fairly good year profit-wise.
For both those sides, both hog and beef, what do you see for corn prices, as in any recommendations for buying?
Well, I've been recommending sort of hand to mouth for the time being. We should get back to more normal weather and better yields and a sharp drop. We could easily take $1.50, maybe a bit more off of corn prices this fall compared to where we are today.
Quantify the demand for me for pork now, and then what you think it might look like as we go into summer and prices start to tighten up when supplies do.
Well, pork demand usually picks up a bit when you get into grilling season. Pork chops and pork steak do well in summertime when grilling is popular. Also, bacon prices are normally the highest in late summer when we hit BLT season. Bacon's been doing well for several years now, and hopefully we're looking for a strong demand situation again this summer.
There's good news in the pork industry on the export front. They set a record in 2012. Tell me about what that means and what it could mean going forward.
Yes, absolutely. Second consecutive record year for pork exports. We're exporting somewhere 22–23% of all the pork we produce in the United States. So it's a very important market, and a lot of what we export is high-dollar cuts of pork. A lot of tenderloin and pork loins go into Japan. So it's very important to the hog industry that we do well. On the other side of it, imports were down. 2012 pork imports were the lowest since 1998.
Do you have any potential hurdles on the horizon in that export market, Ron? Or do you think it can continue to be strong?
Well, we're doing real well recently in shipments to both Canada and Mexico, two big markets. The big concern right now is Russia. They put new restrictions on imports of meat from animals that are fed ractopamine. So we've seen a sharp drop-off in pork movement to Russia. But hopefully we'll continue to do well on shipments to South Korea and Japan. So right now I'm looking for total pork exports here in 2013 to be very close to that record we set last year.
I'm putting you on the spot here, but with Russia, how big are they when it comes to pork and beef, as in does it have an immediate impact that's felt?
Well, it matters. Some of the weakness in pork cutout value has been due to Russia buying less, but they're like our fifth or sixth largest foreign market for pork, and probably somewhere around fourth or fifth on beef shipments. They also tend to buy lower valued cuts. So yes, it hurts, but it's not near as important to us as, say, the Canadian or the Japanese market.
Right. The USDA also this week announced their 10-year forecast for a few things, and when they looked at the meat trade, they saw the growth in chicken growing faster than pork and beef. Is that at all a concerning trend to you?
Well, that's the trend. If you look back through most of the 80s, 90s, and first decade in this century, chicken production grew much faster than the other meats, and so it's reasonable that they would forecast that. But there are indications that chicken may not quite do as well going forward. Domestic demand has been a bit softer, and the key cut, chicken breasts, have not done particularly well in the markets, at least didn't last year.
All right, give me your outlook here for prices going forward, if there's any opportunity to lock anything in on the futures market.
Well, there was until a few weeks ago. We've had drop-off in cutout value and some weakness in hog futures. I'm not recommending any hedging at this point. I expect hog prices will make it into the upper 90s this summer, get close to $1 a pound on a carcass weight basis. That's above current summer futures. Again, seasonally, we should see prices really start to pick up sometime around the 1st of April or so, and then a strong push up during May.
Ron Plain, our guest, University of Missouri. Ron, thanks for the time.
Always good to talk with you, Jeff.